Hey fellow stock guardians, it's Thursday, May 13th, 2021. I'm Hoda, co-founder and CEO of StockCard, reporting to you from a green stock market for a change. I researched the impact of the new jobless claims report on the stock market indices, discussed whether it's time to buy LMND shares, and explored why Bumble dropped below its IPO price. All three indices ended the day in the green, and investors celebrated the 34,000 lower number of new jobless claims compared to the previous week. The concerns over the high inflation rate gave way to the excitement over a lower number of new jobless claims, at least for one day. Shares of LMND, LMND, were up more than 7%. This new startup provides easy-to-use and friendly interface to buy your home insurance, pet insurance, and life insurance while using artificial intelligence to enhance its back-office processes. The price jump today is a response to a double-digit drop after the latest quarterly earnings report last week. In that report, LMND shared 50% growth in the number of customers and a 68% jump in its gross loss ratio. Investors got spooked by that higher loss ratio and sent the stock off the cliff on May 11th. The jump in gross loss ratio results from higher claims after the winter storm in Texas. That's quite reasonable. Any insurance company would see a higher rate when catastrophes like that hits. But on the positive side, take a look at the company's opportunity. It's only growing into new product categories such as car insurance right now. It has more than 80% retention rate of its existing customers. And yes, the stock price is higher than its competitor, which is a risk. For example, the valuation ratio of the insurance provider Aflac, AFL, is relatively lower than LMND if you compare the stock cards of these two companies side by side, but the growth opportunity for LMND is significantly higher than the likes of Aflac. A few days ago, we spoke about Match Group, MTCH. The company is an owner of more than 45 online dating and matchmaking apps and platforms. That has been an excellent investment the last few quarters, since it spun off from IAC Interactive Corp. Today, from the list of companies that finished the day in the red, I noticed shares of Bumble, BMBL, were down more than 14% below the company's IPO price. Bumble is a new IPO and a small competitor to Match Group. The company released its latest earnings report yesterday. Revenue was up, so was the total number of paying users. It also increased its full-year revenue guidance. It's tough to understand why the stock is down more than 14%. It seems analysts weren't too impressed by a slight increase in the revenue forecast and outlook. From what I gather, the market is pessimistic about new IPOs, and Bumble is falling victim of the negative sentiment. That's it for today. If you haven't already done so, please give StockCard a try. Research as many stocks and ETFs that you want and consider following a few successful investors by visiting the Stock Picks page on a StockCard platform and use promo code ROLLWITHOURCEO to sign up for a 14-day free trial. And as always, help us grow the Stock Guardian community by liking, subscribing, and sharing these daily market recap reports with your fellow investors, especially if you enjoy them. I'll see you tomorrow.